The bears had an opportunity to gap the market down on the daily chart, and they were unable to do so. So they are not as strong as they possibly could be. We could still be at the start of a move down to the bottom of the channels. The gray line is the first one, and the other red lines below are potential channel bottoms as well. The market tends to stop doing the same thing at some point, and right now it's been doing the same thing a lot. On the way up here on the daily chart, basically a two-legged correction, new high. Two-legged correction, new high. Two-legged correction, new high. Two-legged correction. And this is the fourth time. So I suspect that we'll do something different this time. So I don't know if that means we sell off. I don't know if it means we go sideways into a trading range like this, but I think we'll do something different. On Friday, we had a climactic move. The bears hope that it's the start of a big move down, measured move down, and the bulls want it to be simply a two-legged correction. Here's the first leg, here's the second, and the second broke down into two legs as well. Most of the time, let me rephrase that, two times out of three, when the market has an extreme sell-off, the next day the market gaps up and tries to form a trend reversal of some kind. One chance out of three, you get a gap down and a potential measuring gap. Three pushes down, parabolic sell climax, 34, 67, 71. So what about buying above one? If it has a very strong bull close and a big body, I think you can make a case for the low of the day and a swing buy. Probability not all that high, but if it does turn out to be the low of the day, it's possible that you can make 10 points while risking 3. And what about shorting? If it's on, it closes on its low tick, small, low 2 pushes up, 80, and then 1, same thing. Right now, probabilities, I think, are not all that high. We're trying to test that weekly low from 2 weeks ago, which is that pink line. There are other targets above as well. Close above the midpoint, a reversal bar, but after such a strong sell-off, I don't want to buy unless I see either a major trend reversal or some reasonably strong buy setup, or a major trend, well, that's it. I would need something strong. Close above the midpoint, so it's a reversal bar, but barely. a possible low of the day. We had a day like that over here, right? Closed below the midpoint, and the market still rallied up 4 points or so. Low probability buy. I think better to wait. We're in a bear trend. This is a low 2 short below 1. I think it's not a strong trade. We're not at obvious resistance, not quite to the pink line, not quite to the moving average. And a big tail on the bottom of 1 that increases the chances that there'll be more bears more bulls buying below 1 than bears shorting below 1. So it looks like we're probably entering a trading range here. First bar, trading range bar. And we're not at obvious support or resistance. We have a ways to go to yesterday's low and to the moving average. So we'll probably go more sideways. Here's the daily chart. Weekly chart, we reversed up over here, and then last week down over here. So 2-bar reversal spread over 3 weeks. If I could create a 3-week chart made of 3 week bars, this would be a reversal bar over these 3 weeks. Technically, it doesn't trigger the short until it gets below this bear bar. I think you can argue it's short now. I think it probably is short now, simply going below this bar. But last week we closed on the low, and I think it's a stronger signal bar. Daily chart. At the moment, I would rather be short than long. I'm currently flat. So for me, the daily chart is always in short. 60-minute chart. I don't know if you've noticed. I had bull channels, and I've removed the lines, and now I'm starting to highlight bear channels, right? Because I think the 60-minute chart is always in short. Even though we don't really have yet a series of lower lows and lower highs. We had a couple of very strong moves down, so to me that favors the bears. You can see buyers at the 1 low. For the bears who shorted there, thinking, oh wow, low 2 will continue Friday's sell-off. And Friday's sell-off was extremely climactic, and 78 might end up being an exhaustion gap. First target on the upside, you always have to think the moving average. Then you have to think the top of the exhaustion gap, bar 78. If it turns out to be an exhaustion bar, the market will try to get 1 tick above its high. Some bears have 1 tick above the high of that bar as their stop. Every time the market makes a new low or a very strong bear breakout, they'll tend to tighten their stops to 1 tick above the high. So technically the bear stop is 1 tick above the most recent lower high, which is 71. I don't think many bears would risk that much. 10-minute bear bar, open right here, close on the low. So if this were a 10-minute chart, that would be a pretty good bear bar. Let me put a 10-minute chart on the right. See, pretty good bear bar there. Breakout pullback, strong breakout pullback, but I still think the math is not all that good for the short. The market wants to get below yesterday's low. It wants to see what's there. Are there buyers there reversing the market up in a small lower low major trend reversal, or are there sellers creating a big plunge down? I think most breakouts fail, so I think if we do get down there, probably more buyers. I'll put this in here as a reminder that we may try to get a major trend reversal early this morning. So I think, at the moment, I think it's more likely we're going to set the low of the day early. I don't know if it would be a bull trend day or trading range day, but right now I think that's probably what the market will try to do. 2 pretty good bear bars, so you can make a case that it's always in short. But why are we Why did we not gap below yesterday's low? Why are we within yesterday's range? The answer: the bears are not as strong as they could be. Bar 3 completes the 15-minute bar. On the right, that's the 15-minute bar. Bears want a close on the low to create a 15-minute low one for a test down below yesterday's low. The 15-minute short, one tick below that bar, stop above the high. So you're risking about 4 or 5 points, so you cannot be scalping for 1 or 2 points if you take that short. 10-minute trade, if you're taking this short right here, stop is up here, about 3 points up. So you cannot be scalping for 1 point if you take that trade. What about buying with limit orders and scaling in lower? I would not. Too much risk that yesterday's trend will resume. The market can fall very quickly in a strong bear. We are in a strong bear, but we're trying to convert it into a trading range. I think the bulls will be able to succeed, but they have not done it yet. We currently have 3 consecutive bear bars. Wants to find out what's below yesterday's low, buyers or sellers. Hesitation. Why? If everyone wants to see what's there, why don't we just collapse down to there? Because yesterday was a huge day, and very often the market will try to handle stuff like that. We had that during that other climax. I don't remember. We had. I can't find what I'm looking for. Right here, right? Very strong sell-off, double bottom. We raced down here. Look at this, 6 or 7 bars down, right? But one tick below, one tick above yesterday's low, the market reversed up, even with all of these consecutive bear bars, right? So that can happen today. We don't have to fall below yesterday's low. We can race down to it with a series of bear bars, only to reverse up once we get close to it. Since we're always in short, you can short at the market, but I think it's a little bit late to do that because now we're almost to yesterday's low, and there may be buyers here. So if you're shorting, I think bar 3 was the bar. For the bulls, higher, low, major trend reversal. I would only consider buying it if this was a reasonably strong bull bar, a 3 or a 4 tick body closing on its high tick. Otherwise, I would wait. Normally, I don't want to buy after 3 strong consecutive bear bars, but the context is here is I think enough to make this a possible low of the day. Big sell climax yesterday, and then here testing yesterday's low, forming a potential inside day. If it's not a strong bull reversal bar, I think better not to buy. You could sell, put a stop above 1, but I would not. I think, to me, why did we open above yesterday's low when we had such a strong sell climax? It makes me think that we're going to try to convert into a trading range. Buy low, sell high, scalp. We're low, so I'd rather look to buy. But I need a decent looking bull bar to take the long. So if you buy this swing only, I would only consider it if it closes on its high tick. If you want higher probability, you have to wait. And I think most traders probably should wait unless this becomes an extremely big bull reversal bar in the final seconds. Acceptable swing buy, right? But you have to manage it as a swing if you do buy it. It's a pullback short, right? We broke out below a low 2 bear flag, and we're pulling back. With each new tick higher, the odds of this being the low of the day increase. If you did buy, I would take at least half off at 2 points. Actual risk was only 3 or 4 ticks, and you're actually it's probably only a couple of ticks, and you've already gone more than twice that. And there are reports at 7 o'clock. As far as shorting below 5, viewing this as a pullback from the breakout of the small bear flag, I still think trading range is most likely, and so I believe that shorting below 5 is shorting probably near the bottom of trading range. So low probability trade. But sometimes you get huge follow through. Look at bar 57 yesterday, right? Right? Shorting at the bottom of a trading range. You look at this and you say it's probably going to double bottom here, maybe double bottom here, and turn up 2 legs down, right? That was more likely. But sometimes you get that. Usually you don't, but sometimes you do. So the target, realistically, is 1 tick above the high of that 78 bar. And right now, I think 60% chance we'll get there. We have a report, or 2 or 3 reports coming up in the next few minutes. So not a great time to buy. So if you're buying right here, you have to buy very small. I think better to wait. Since you can be still holding along from above 5, at least a swing part, you could put a swing part on right here and use the same stop. Usually in this situation, if I'm flat, I just wait for the report and then see what happens. Because reports oftentimes make the market move quickly and sometimes violently, multiple reversals, up, down, up, down, up, down. And it's impossible to think quickly enough to trade well. A breakout pullback short or a double top with 1. At the moment, I think we're always in long after the 2 bull bars reversing up from yesterday's low. So low probability short, more likely buyers below, and that will get up to 1 tick above the 78 high, which is that red line. It makes sense to place a buy limit order at the 6 low and a stop below 4. The math is probably okay. I think in practice, it's very difficult to do that. You get the report coming out. By the time bar 6 closes, the very next tick, or the very next second, the bar could be 2 or 3 points higher or lower. So I think very difficult to place a trade here going into the report. So the bears have a legitimate case for a short. Stop above 12. Once we get below 15, stop above 18. A lot of buying pressure. 5, 7, 8, 16, 17. So I think more likely trading range. Let me put up the edge. So this is the inverse of the spider mini. 2 times the leverage, but the overall shape is correct. You can see a strong bull spike, a pullback to a wedge bull flag, 3 pushes down, 1, 2, 3, or 4, right? And a breakout here and trying to push higher. Possible wedge top, but right now, clearly always in long, which means E-mini clearly always in short. Close new low of the day, a breakout bar, but fairly prominent tail, so not a strong breakout. We had the wedge, we may end up forming, we had the expanding triangle bottom, we may end up forming a wedge bottom. you hear me talking about bottoms, and we're clearly in a bear trend, right? But we're not behaving the way a bear trend typically behaves. So it makes me think that we're probably going to stay in a trading range today. In other words, we'll probably reverse up at some point today. No convincing bottom yet, so that means I think we'll still go sideways to down more for the time being. I'm hoping that's clear, but this is the point I'm trying to make, that the market's trying to create a wedge bottom. Bears want a bear breakout and a measured move down. Bulls want a reversal up to test the top of the wedge, the 11 high of the day. But no bottom yet. Trending down, still not a good buy setup. The bulls need a pretty good bull reversal bar or a strong breakout, upside breakout. Bears were still trending down, but in the form of a wedge. So I think most likely this will end up as a bottom pretty soon. Less likely we'll get a bear breakout, a failed wedge, and a measured move down. For me to buy in this relatively tight channel, I would need a very strong bull bar. Otherwise, I would wait. To short down here, you're betting that the channel will succeed. I think it's a reasonable swing short. I'm personally flat and looking to buy, but I want to see a good-looking bull bar. Target for the bulls at the moment, probably the 18 high, but we do not yet have a buy, so it's still always in short. For the 15-minute chart, you can see that red line is a prior higher low. We're trying to get down to the gap. I don't know if we get there today. I just messed that up. Let me fix that. Okay, there. That's the top of the gap. Maybe make that pink, just stand it out a little bit. I'll put 15-minute chart again. So top of the gap, bottom of the gap. That's the gap on the daily chart over here. Possible low today with the bear bodies, though I think probably better to wait. It's a nested wedge. We've got a small wedge here inside of a larger wedge. 15-minute bar closes in 2 minutes. A wedge pattern. Breakout here. Second push down. Might need a third push down. Might end up as a spike in channel. Still not clear for the bulls. For the bears, we're still channeling down, so everything's a short. I think it's more likely that we'll bottom because this has a wedge shape and it's after a climactic sell-off yesterday. So I think we'll be in a big trading range, and if the wedge reverses up, the target would be the top of the wedge, and that would be more trading range behavior, right? We've been reversing repeatedly today, trading range behavior. Strong buying pressure, strong selling pressure, pretty balanced. If I had to be long or short right here, I would be long. I would need a pretty wide stop since the day's range is big and the bars are big. So maybe even an 8-point stop or something. I think best choice is to wait for a stop entry or for a strong breakout up or down. Although you can make a case for being long right now on the wedge. But 8 or 10 bar bear microchannel, bear signal bar, and a bear trend. I usually do not take that trade. I wait for something stronger. 15-minute reasonable swing buy, despite the 6-bar microchannel. Five-minute chart, probably okay swing buy at this point since 27 closed on its high tick, and it's a breakout. But I think it's still, I say swing because the probability is just not all that high yet. We're still channeling down. I think we're still always in short. Top of the wedge, small wedge, top of the bigger wedge, those are the two targets. Not strong, but we are trending up. We've been trending up since 26 in a weak channel. Can you take all of it off at 2 points? Sure. I think the math works out. For the bears, we have a push up, 32, so spike, and then 2 more pushes to a wedge, 40, 44 at the top of the channel, at the trend line. Just about a double top with 18. I think not a high probability short. For the bulls, I ended up going totally flat at 2 points, and I'm not willing to sell this, and the price action is not strong enough yet for me to be willing to continue to hold up here. We could continue up to the 11 high, but where are the consecutive strong bull trend bars? We're not forming them. Where are the very big very big bull trend bars? We're not forming them. Where was a really strong signal bar at the bottom? Don't have it, right? So the bulls are not generating enough strength for me to continue to bet that this is going to turn into a bull trend. It might. We can accelerate upward any time. But until we do, I think we're still in a trading range, and that makes me quick to exit longs near the top. And I'm willing to short up here. We have a lot of bull bars since 26. So I probably will not short here. I'll probably wait. Here's the SDS, the bear perspective, the upside down version of the chart, wedge bull flag, looking for a new high of the day. Here's the E-mini, wedge bear flag. I know it's not clear, right, but functionally it's a wedge bear flag. You got to spike up 32 and then 3 pushes. To me, I think we're always in long, and this is not a strong top. So I'm currently flat, and I'm waiting for more information. Can you short this for swing down? Absolutely. But a very tight channel and a lot of bull bodies within it, to me, makes this a low probability short and probably a difficult short to manage. In other words, it's unlikely that we'll go straight down quickly. More likely we'll go in a tight trading range and it'll be hard to hold on because you'll constantly be deciding that maybe it's failing and maybe it's going to reverse back up. Maybe we're just channeling up. Tight channel, a lot of bull bodies. And we're still on the higher low major trend reversal. So there are problems with this short, I think. Still channeling up. They're still buying at the lows. 31 low, 33, 35, 41, 45. But weak channel, pretty flat, not covering a lot of points. I don't mind buying below the low of a bar when I think the market's always in long. When I do it, I prefer to buy early in the channel, and I'll buy late in the channel if the channel is very strong. This is not strong enough for me to buy the 45 low. For the bears, as I said, tight channel, too many bull bars, so not a strong enough sell for me. So even though we're always in long, we're weekly long, and we're mostly a trading range day, and we have a potential bubble top with 18. If we get above 18, next target, the 11 high of the day, and possibly the 60-minute moving average. So you can still be swinging along here, trailing stops up, below 37, below 42. I'm flat because the channel is just not strong enough for me to continue to hold at the top. All right. It's too much of a trading range look, especially since bar 15. And trading range, I want to buy low, sell high, and scalp. So when it gets high, I look to sell. Either sell into shorts or to sell out of longs. I sold out of longs. Another breakout pullback buy. Broke above a prior high, new high in the channel, and we pulled back. Okay swing with a stop below 42. Okay swing, convert to a scalp. Stop below 42, and if it quickly goes your way, scalp out. I'm personally going to wait. If we get a strong bull breakout, I'll buy a close or buy a 1-minute pullback. For the bears, they're still short below 45, and I think the setup is not high enough probability for me. Still higher lows, 42, 48. High 2 buy, 2 legs down, 45, 48. But a bear body, 3 of the past 4 bars, bear bodies. To me, I'm not going to buy up here. I'll wait. If we get a strong bull breakout, I'll buy. For the bears, they have their short below 45, but tight trading range since 40. A bigger, fairly tight trading range since 15 or so. Hard to make money. Best choice is to patiently wait. On the right, you can see the 15-minute bear inside bar, but a lot of prominent tails, tight trading range. I think not a particularly reliable short, certainly for a scalp. Maybe you can take it for a swing, but with all of these sideways bars with tails, probability not very good. Right now I'm flat and I'm waiting. Triangle, 42, 48, 50. Suppose we get a bull reversal bar here on 50. I think it's another potential buy. We have a triangle and a small wedge bull flag, 3 pushes down, 45, 48, 50. Anything less than a bull reversal bar, I think better to wait. Tight trading range, bad to enter on stops if you're scalping. But you can buy this for a swing if it's a decent bull bar. Looking for the upside breakout, maybe a measured move up. Low probability, but if you get a quick upside move, you could scalp out part. The bears still are on their short below 45, but they have to be disappointed with the price action so far. Not strong enough signal bar for me to buy. For the bulls, wedge bull flag, double bottom. The bears were still in the wedge short below 45. So what about buying this? It's still a double bottom, 42. Still a wedge bull flag, 45, 48, 50. But tight trading range trumps all reasons to scalp with stop entries, so not a good scalp. I think we're probably still always in long, but weakly so. I think better to do nothing. The bears, they could still be swinging a short below 45. I think 50-50 chance we get a bull breakout, 50-50 chance we get a bear breakout. And I think the breakouts probably won't fail. Won't go far. And I think 50-50 chance if we do get a breakout, it'll fail. So the math, I think, is not good here. I think we're still always in long, but we don't yet have a convincing breakout. I'm trying to get it right here, it looks like. So what about buying the market, putting a stop below 53, similar to buying 40. It is very similar to buying 40. But I don't know, I personally did not take it. I'm going to wait. The market does things to make you not take good trades and to want to take trades that end up being bad. So it makes it hard to decide. Especially, we've been in a tight trading range for 2 hours, right? So every time we get a little breakout, traders have to decide, 40, 44, 47 down. Five-tick pullback, not very good when you have a 10-tick tall bar. Well, let's say it closes on its high tick. Can you buy it and put a stop below 53? You're buying at the top of a trading range. Arguably another higher low in a bull trend, and it is. We've been trending up since 25, forming higher highs and higher lows. But a very weak bull trend. So for me to buy high, I need something very impressive. And this is not impressive enough for me. Is it still a breakout? Sure. Can you still buy it? Absolutely. But I think the probabilities are not very good. You're betting on a successful breakout with good follow-through. And look at the past 40 bars. How effective has that strategy been? It's been terrible. Coming into the day, we had an exceptional sell climax yesterday. 2 chances out of 3 we would gap up and try to rally today. 1 chance out of 3 we would gap down and possibly have a very significant top on the daily chart. And today we get the bullish alternative. First bar of the day, a bear bar, low 2 with 80, got a big tail on the bottom of the bar. I would not take the short. To me, we're far from support, yesterday's low, and resistance, the 78 high and the moving average. So we'll probably go mostly sideways in here. 2, a bear bar closing on its low, always in short, but probably buyers around yesterday's low. So if you take it, you got to keep that in mind and probably scalp. We're always in short. 4, bull reversal bar, higher low major trend reversal. Today could be an inside day, staying within yesterday's big range. Okay, buy for a possible low of the day. With those 3 bear bars and the size of 4 not being particularly large, I think probably better to wait. 5, very good bull bar, but bulls need follow through. We may drop below yesterday's low with 6. However, I think the odds are we're going to find buyers here. We have a channel below. We found buyers yesterday, 79, today 4. We're getting good buying pressure, so I would not take that short. 7, a high 2 on the day, but a tight trading range, probably breakout mode. Probably okay to buy above, but whenever the signal bar is that big, you got to have a market that goes up pretty quickly, or otherwise, don't hold on long. We could easily reverse. We'll probably get buyers below 8, but it's possible that we go below yesterday's low. If we do, I think a reversal up and an expanding triangle bottom is more likely than a measured move down. 8, decent bull bar. 9, follow through. Buyers below. We're right at the moving average. Why did 9 close below the moving average instead of way above? So the bulls are not as strong as I would like them to be. 11, a second entry short, a wedge bear flag. 1, 9, and 11. But 4 consecutive bull bars, 5 bars up. Probably, always in long. I think low probability short. If you're shorting, you're betting on a new low of the day, which is a reasonable bet. But to me, I think it's more likely we're going to bottom. So I'd rather be ready to look for buys. 16, expanding triangle. Bull inside bar, closing on its high tick. Good for the bulls. Increasing buying pressure, probably going higher. But the 4 bear bars make me think that we may have to go a little bit sideways here. You can buy this, but I think it's probably better to wait. 18, 2-bar reversal, similar to 6. I think we're trying to bottom here. Every time we drop in this area, we're getting buyers, 79, 4, 5, 15, 16. So I think we're forming a low of the day. You can take the short, certainly for a swing, or you can wait to see if we form a bottom and then go long for a swing or a scalp. 3 small pushes down, 19, 20, 25. A larger wedge, 79, 6, 15, 25. I don't like to buy above a bear bar. 26, not a good looking bull bar. 27, closing on its high tick. Probably a more reliable buy, but so far still not a great trade. Wedge bottom, I think we may have seen the low of the day. First target, 18 high, possibly the high of the day. The open of the day is an obvious target. The day might try to become a doji bar on the daily chart. Not yet a strong buy. You could wait for a pullback to buy. 31, another failure at the moving average. Double top with either 18, 20, 22. Take your pick. Does not matter. To me, I think we have a wedge bottom, and I think we're going higher. So I would either be long or looking to get long. You can take that short. Low probability, but so were the shorts yesterday. The result was a huge profit. In general, I prefer to take high probability trades, and I think it's more likely that we're going up. Confusing, tight trading range, bad for stop entries if you're scalping. So not good scalps below 31 or 33, not good scalps above 30 or 32. Swings maybe. 34, a pullback from the 33 breakout, but 35, a pullback from the 33 breakout. But 34 is a pretty good sized bear bar. I think okay to wait. I thought 39 was interesting, 38 or 39, 2-bar reversal. Double bottom, 32. Double bottom, higher, low, major trend reversal. 2-bar reversal, 37 or 38 down, 39 up. Okay, swing buy. 40, small breakout, but I think we're always in long. Probably buyers below 42. The bears can short, double top, 33. However, we have a wedge bottom and a huge sell climax yesterday. I think it's more likely that we're going to work higher. I think probably buyers below 41, probably buyers above 42, but at the moment not yet very strong. So you'd have to be trading for a swing. Stop maybe below 37 or 32. 45 wedge, 33, 41 or 40. 2-bar reversal, failed breakout. We're getting far too many bull bars since 26. The channel is too tight. I think buyers below. I would not take the short. 46, probably buyers above, but I would only buy for a swing. We're right at resistance, double top 18. So the bears see 45 as a wedge bear flag, double top 18. Okay, swing short. I would not take it. I think we're still always in long, and we're channeling up. For the time being, very weak channel, not covering many points, but still a channel up and still always in long. 52, bull reversal bar, 2-bar reversal, 50, 51. Certainly an okay swing buy. Failed breakout below 42, still forming mostly higher lows. Weak breakout 43, 44. Excuse me, 53, 54. Outside up 55, but at the 15-minute moving average, and not very strong. But we're starting to get a series of bull bars again, like up to 10 and then up to 28. Looks to me like we're trying to get higher, but it's not moving up strongly. I'd like to see a good looking pullback to buy. You can buy up here with a swing stop. I think too early to sell. 57, 2-bar reversal, like 43, but 5 consecutive bull bars. I think buyers below, maybe sideways to the moving average. Second entry short at the 15-minute moving average, 60. But too many bull bars and still in the channel, so low probability short. 62, another 2-bar reversal, another high 2. But buying at the top of a weak bull channel, low probability, swing only, using a wide stop, maybe below 51. 64, bear, breakout pullback buy, probably sellers above. 65, micro double top, 63. 4 pushes up, 33, 44, 66. But very tight channel, too many bull bars. I would wait. Tight trading range, 69, second entry short. Tight trading range, shorting for scalps with stops, losing strategy. To me, it's not strong enough to swing a short, so I think it's always in long. Probably better to wait. 70, failed, low 2, and bull trend, but not a strong signal bar. Market did not care, just kept working up into the close. Where do we go from here? We're very close to the 60-minute moving average. Probably have to go a little bit higher to get there. The bears don't mind any of this on the 60-minute chart. They see lower highs, lower lows in a bear channel. So they'll short the moving average. They'll short a rally to the 60-minute trend line. Bulls are hoping for a large high 2. To me, not a good signal bar, especially after that much selling. And the rally, as persistent as it was today, is not as strong as the sell-off yesterday. So not a compelling case for the bulls. Stop entries today for the bulls. 4, swing only. I would not. 7, I think better swing, but weak follow through. We're starting to stall at the moving average. 16, I thought it was better to wait. If we broke strongly to the upside, I would have chased it higher. 26 or 27, I think swing for the wedge. I think probably better to wait. And then we started to get these bull bars here. Next, I think reliable buy, probably above 39 or 52. But for a swing, you could buy 32, you could buy 35, and just keep your stop below the most recent higher low. Most of the signals today, I think, were low probability. 62, another high 2, 70, another high 2, but a tight trading range and a bear bar. For the bears, the shorts were not all that good. 2, maybe a scalp. 6, terrible. 11, moving average, right? Double top with 1, second entry short, wedge bear flag, but a weak signal bar and pretty good rally. So low probability. 18, I thought we were forming a bottom. Better to look for longs. And then there were problems with every one of these shorts. Too much buying pressure. Market orders. Let's do limit orders next. The first one that made sense, I thought, was the 9 low for a scalp. Maybe the 30 low for a scalp. But after you see 31, I think probably better not to buy. Tight trading range in here. I would only do the buys. I think the market has a wedge bottom and we're working higher. In here, 54, I think you could buy that low. You could sell the 64 high, but I would only do it for a scalp. Market orders, not really a lot of good ones today. The 8 closed, but then when you see 9, you have to be thinking about scalping out. 13 closed, 14 closed, 14 closed. If you scalp that, I think if you sell that, you have to go for a scalp. With that tail and the context, probably not going to go much further down. On the way up, maybe the 27 or 28 close. 28 close probably makes more sense, but not strong. The 40 breakout, yes. The 44 breakout, I don't know. Potential wedge, double top. I don't like to buy that close to resistance. Over here, 53 outside up, but most breakouts will fail. This will probably fail. It did. 63, another breakout, probably will fail. It did not reverse down, but it went sideways. And then up in here, the market trying to get to the high of the day, and then to the measured move target, and then to the 60-minute moving average. I think difficult trading. Everyone knows it could reverse quickly. So overall, not a lot of good trades today. It's possible to make money. I made money, but I did not make what I usually make. However, my goal is to make money. My goal is never to make a lot of money. My goal is to make money and to avoid mistakes. And then some days I make a lot of money. And when it happens, that's great. But if it doesn't happen, I don't worry about it. My goal is to make money. 60-minute chart, to me, as I said, we're still channeling down. The bulls need to do a lot to change this. Daily chart, this is the fourth high 4 that we've had in this rally, or the fourth high 2 that we've had in this rally. I think we're probably going to go sideways more here, especially since we're at the top of a channel. We've got this gray channel and then this broader weekly channel. So I think we'll probably go sideways. Are we topping out? I don't know. Nobody knows. You have the bears speaking confidently that this is the top. You have the bulls speaking confidently that we're just going to keep going higher. A lot of the overdone stocks were hit over the past couple of weeks. Johnson & Johnson, obvious one. Disney. Whirlpool. No, Whirlpool not too bad. Anyway, a whole bunch of them. Procter & Gamble is another. But, it may simply be pullbacks in an overdone bull. I'm not convinced that we're at a top. Other stocks still look pretty good. Here's Yahoo, right? No sign of a top. Intel. Sometimes I have to type 2 or 3 times to get the key to register when I'm in GoToWebinar. Here's Intel. Does that look like the market's at a top? Not at all, right? So, I think this is a possible high of the next several months. But with today's open and then today's price action and today's close, I think more likely more sideways. I think today made the picture less clear. The bears had a good chance, but they needed the gap down and the sell-off today. They did not get it. Am I upset? No, not at all. I don't care. I never care. I never care about anything when I'm trading, because if you care, you will not be objective. You'll have emotion attached to the to your decision making, and you'll make mistakes. Okay, how do you manage trade when it's swinging and scalping at the same time? When you take profits on the scalp portion, do you scalp out half and swing the remaining half, or do you scalp out 2/3 of the position and swing the rest? You bring up a good point. How complicated do I make it? I try to keep things simple, right? So if I'm scalping and swinging, right, my initial, if I think the day could be a huge trend up or down, I'm usually not too quick to take my scalp portion off, right? I usually like to take it at 2 points, but if the price action looks really, really strong, I'll try to hold it for 4 points. But usually I'll take it at 2 points. And then I start swing trading the other half. And if there are reasonable arguments for the bears, like through here, I'll usually scalp out the other half as well and wait for another setup. But if the market is trending up strongly or trending down strongly, I'll just trail stops. So had I held my longs here and had I swung this up, every new high, bar 44, I'd move my stop to the most recent high or low, like here or here. New high here, I'd move my stop to here or here. New high here, move my stop to here. And I would keep my position on until I saw a credible sell signal. Typically, when I'm swinging, I'll put scalps on along the way and treat them independently. You know, scalping in for trade, scalping out, right? Okay, so I think the market's really interesting, but I always think the market's really interesting. I'm assuming that we're going to do something like this and go sideways for about a month and make arguments for the bulls and bears. But, you know, I could be wrong. It looks like tomorrow we're going to go above today's high and trigger the high too, and then maybe get up here, maybe get up here. So this would be a target. That would be a target on the upside, assuming we go up. I don't know that we are. The bears want the market to just keep channeling down, lower highs and lower lows. Daily chart, bulls and bears both have decent arguments. I think most likely sideways for the next week or 2 or 3. Okay, hope everybody has a good night. Tomorrow is that Big Mike webinar at 1:30.